Hello everyone, welcome to WealthHead. SCHD and SPHD are two ETFs that many people are interested in and looking to invest into. So in this video, I'm gonna do a detailed comparison of these two and see which would be a better choice if I had to choose just one and how I am currently invested into these. But before we start, it's important to know that none of this is financial advice. It's all for entertainment and educational purpose only. It can be very difficult to decide between two assets that fall into the same category. So we're going to compare 6 aspects of SCHD and SPHD to compare and decide which one could be a better choice to invest into. The 6 parameters that we are going to look at are basic information about the two funds, assets under management, portfolio diversification, past performance, dividend payout, and dividend history. So let's start with the basic information about SCHD, which is Schwab's US Dividend Equity ETF. This is an exchange-traded fund that invests in large and mid-cap US stocks that have a history of paying dividends, as well as those that are expected to pay dividends in the future. The ETF aims to provide investors with exposure to high-quality companies with sustainable dividends and a track record of financial stability. The investment objective of this fund is to track as closely as possible the total return of the Dow Jones US Dividend 100 Index. The Dow Jones US Dividend 100 Index aims to evaluate the effectiveness of US stocks that offer high dividends and have a history of regularly distributing payouts. The stocks included in this index are chosen based on their strong financial ratios in comparison to similar companies. In case you don't know, financial ratios are quantitative measurements used to evaluate a company's financial performance and health. They are calculated by dividing one financial metric by another to provide insights into different aspects of a company's financial situation. Some common financial ratios include profitability ratios, such as gross profit margin and net profit margin, liquidity ratios, such as current ratio and quick ratio, and leverage ratios, such as debt to equity ratio and interest coverage ratio. SCHD has an expense ratio of 0.06% and a price to earnings ratio of 13.49. SPHD, on the other hand, is Invesco's S&P 500 High Dividend Low Volatility ETF. This is an exchange-traded fund that seeks to provide investors with exposure to the performance of the S&P 500 Low Volatility High Dividend Index. The ETF aims to invest in 50 least volatile stocks in the S&P 500 index that have also shown a history of high dividend yields. SPHD has a higher expense ratio of 0.3% and a PE ratio of 14.80. So when it comes to the basic info, these funds track two different indices, but both focused on dividends. SCHD has a much better expense ratio, but the price to earning ratio of the both is very similar. Now let's look into the assets under management for these two funds. Assets under management shows how much total assets, that is dollars, the managers of these ETFs are managing. In other words, assets under management is the total dollar amount investors have put into a fund. The amount of assets under management varies on a daily basis depending on the movement of money in and out of a particular fund and the price performance of its assets. The assets under management of an ETF can affect its liquidity, trading costs, tracking error, and diversification. Generally, larger AUMs tend to have lower expense ratios and higher trading volumes. So this means that funds that have a higher AUM are generally more liquid and easily traded. At the time of recording this video, the assets under management of SCHD is around $46.5 billion and the AUM of SPHD is around $3.59 billion. So SCHD has a big advantage over SPHD when it comes to AUM. The next thing we look into is how diversified these two funds are. SCHD currently has 104 holdings in its portfolio, with top 10 holdings being approximately 42% of the total portfolio. These top 10 holdings include companies like AbbVie, Verizon, Pepsi, Coca-Cola, Pfizer, etc. On the other hand, SPHD has 52 holdings and top 10 holdings comprise of just 27% of total assets. These top 10 holdings in SPHD include companies like AT&T, Altria, Verizon, and Walgreens. SCHD has more exposure to industrials, healthcare, financial services, consumer staples, and IT sectors, whereas SPHD has more exposure to real estate, utilities, and consumer staples. Based on the number of holdings, SCHD is more diversified when compared to SPHD, but diversification does not always mean low volatility. Remember that one of SPHD's objective is to provide investors an exposure to stocks that have low volatility. So, if you're specifically looking for something with low volatility, SPHD might be a better option. Now, let's compare the past performance of both these funds. SCHD has a higher 10-year, 5-year, and 3-year return as compared to SPHD. SCHD's price increased from $49 to around $73 in last 5 years, which comes out to be a total return of around 48.9%. On the other hand, SPHD was around $39.5 5 years ago and is at $42.5 right now. That's around 8% increase in price, which makes sense because this ETF is not supposed to be volatile. As you can see in the chart, other than the COVID fall, when it fell to around $25, the fund has remained in that $40 to $50 range. So when it comes to historical returns, SCHD is the clear winner. Now, when it comes to dividends, SCHD has a dividend yield of 3.61% and provides around $2.4 in dividends per share annually, whereas SPHD has a dividend yield of 4.6% and provides around $1.8 in dividends per share annually. So, SPHD pays more dividends to investors. Also, if someone is into getting a monthly income, then SPHD pays out dividends monthly, whereas SCHD pays out every 3 months. But when it comes to historical dividend growth, the 5-year dividend compound annual growth rate for SCHD is a massive 14.26%, and for SPHD, it's a little less than 4%. So currently, SPHD provides higher dividends, but when it comes to dividend growth, SCHD takes a huge lead here. Personally, I think that these two ETFs go great together, but if I had to choose just one, I'd go with SCHD because at my age, I have a higher risk tolerance and can handle the ups and downs that comes with growth stocks. But of course, you might have a different risk tolerance and investing strategy. Currently, I have both in my portfolio and plan to add a lot more SCHD than SPHD in the next couple of years unless something changes in my investment strategy. And that wraps up the comparison of SCHD and SPHD, two very popular dividend ETFs with different strategies and characteristics. As always, you should do your own research and due diligence before investing in any fund or stock. Remember that past performance is not indicative of future results and that investing involves risk and may result in losses. I hope you enjoyed this video and found it informative and helpful. If you did, please give it a thumbs up and subscribe to this channel for more videos like this. Also, feel free to leave a comment below and let me know what you think about SCHD and SPHD, or if you have any questions or suggestions for future topics. Thanks for watching and I'll see you in the next video. Happy investing.